Hi, welcome to Cal CPA's Tax Bill Series. I'm Mary Kay Foss, and today we're going to be talking about Trump accounts. There's been a lot of press about them, a lot of misinformation. So we're going to talk about them, and hopefully you're going to feel really good about dealing with them. So to start off with, here's the Trump account details. It's a new section of the Internal Revenue Code, Section 530A. Effective 2026. Remember that. The accounts have to be for an eligible individual who was born 2008 or later, and we call that person the account beneficiary. And that account beneficiary must be a U.S. citizen with a Social Security number. They're just like an individual retirement account, but we need to know about contributions, eligible investments, and distributions. So let's move along on those last 4 points. So they're just like an individual retirement account, treated in the same manner as Section 408A IRA. It says that right in the code section, same as 408A IRA. So if you understand IRAs, you are going to be way ahead on this provision. There could be no distributions before the beneficiary reaches age 18. Rollovers are allowed, and Section 72 penalties apply. Remember the Section 72 penalty, there's a 10% penalty for someone who takes money out of an IRA before age 59 and a half. And we're setting these up for young people. So why do we have these accounts? Well, there's a couple of reasons. First of all, the current administration, the Trump administration, wants to encourage people having more babies. And so this was one of their ideas to help that. And the other thing is there was a study done in April of this year that found that 40% of Americans do not have anything saved for their retirement. And so this is also supposed to be a fix for that. So let's talk about the contributions. Do you see that date there, July 6, 2026? That's the first day that anybody can put money into one of these Trump accounts. And there are a couple of ways that we can start the accounts. First of all, there is a pilot program, and this is Section 6434. So $1,000 from the secretary, which means Secretary of the Treasury, that means IRS, $1,000 contribution can be put into the account. Now, there used to be a requirement, or they kept talking about the requirement that you had to have one parent with a Social Security number. They eliminated that. So the beneficiary has to have a Social Security number, but the parents we don't care about. And for the pilot program, these are babies that are born between 2025 and 2028. And then parents can put in $5,000 per calendar year. That's going to be indexed for inflation. So the account, who opens the account? Well, the parents can open the account. If the parents, that's going to be relatively easy if the parents open the account. But if the parents do not open an account, and if they qualify for the pilot program, that means the IRS is going to open the account. The employer can also make contributions. We have no idea how many employers are going to want to do this, but the employers can put up to $2,500 per year per employee or dependent. So, and if the employer puts, like, let's say $1,000 into this Trump IRA, that means that the parents would be limited to $4,000 that year. So that $5,000 is the total amount that can come in, disregarding the $1,000 in the pilot program, but there could be some money from the employer. And this is all pre-tax money, so there's no basis. But the other good thing is that the employee is not going to be taxed on the amount that goes into their dependents' Trump IRA. A charity or a governmental unit could also make contributions. I think the thought was that maybe a neighborhood group would want to put money into these accounts for babies in that area. We have eligible investments, and this is, again, this is right from the code section. The term eligible investment means a mutual fund that tracks the returns of a qualified index. So they have to be invested in index funds. I think most people who started out with, I mean, some people will just have the initial $1,000 and put it in an index fund isn't something that people can watch grow that easily, just in my experience. But anyway, it's unusual to me that they have restricted it to index funds, but they have defined index funds. Now, remember I said this is going to start in 2026. This is giving the custodians and investment firms time to get their act together on this, to put together a package that's going to cover all the requirements and also put together some funds that are going to qualify. So here's about distributions. No distributions before age 18. That's kind of an interesting thing. You know, you would think if you were just trying to encourage births, maybe you'd give people $1,000 and they could take it out to buy diapers and formula and things like that. But that's not the intent of this, because we also want something for retirement. So Section 72 applies. That means there has to be an investment in contract that does not include the contributions other than from the parents. What I'm saying here is that the only basis that there would be in this account would be those contributions from the parents up to $5,000 per year. And normally when you use Section 72 and you're looking at an IRA with basis, you have to consider all of the IRAs that that person must own. You do not have to do that with these Trump IRAs. You just look at this particular IRA to see how much of the distribution is basis and non-taxable and how much is taxable. Now, in the year that the beneficiary turns 18, they can do a rollover. They don't have to do a rollover. Why would you do a rollover? Maybe somebody wants to invest in something other than index funds. That would be one reason. Maybe they want to be in an account where there were no restrictions on distributions, although once you're 18, there's no longer a restriction. And when we say age 18, we don't mean the birthday when they turn 18, we mean the year that they turn 18. So if somebody's birthday is, let's say, August 30th, they can take money out as of January 1st in the year that they turn 18. They don't have to wait till the end of August. There's also something called a qualified rollover. And this is if somebody doesn't like the Trump IRA or Trump account they have, they might want to transfer it to another Trump account. So they do a trustee to trustee transfer. They have to transfer 100% of the account, and that must be reported to the IRS within 30 days. Normally, when we have a rollover with an IRA, it is reported early the next year on Form 5498. It might be reported by July 31st. It could be by May 31st. Again, it depends on the nature of that IRA. But this qualified rollover must be reported to the IRS within 30 days. Now, if our beneficiary were to pass away before age 18, the entire account becomes taxable, and it's going to be shown on their final 1040, and there will be tax owed. Again, if the parents had made some contributions, those are going to be basis so that it wouldn't be fully taxable. But yeah, that's what happens if somebody, it's the only way that you can take money out before age 18, kind of unfortunately. So here I wanted to do a little comparison of the Trump account with an IRA. So first of all, is there an age limit? Well, the Trump account, everybody has to be under 18 in order to have one of them. And with an IRA, there's absolutely no age limit. Now, do you have to have earned income? For a Trump account, you don't have to have earned income. And we're thinking that a lot of babies will have these accounts. So no earned income there. But with an IRA, there has to be earned income. That individual who has the account has to have earned income at least equal to the amount that they're able to put away that year. Are there investment restrictions? Yes, in the Trump account. They do not let beneficiary or whoever is managing this for this minor beneficiary have any say in the investments. They just have to be these index funds. With the IRA, there's no restrictions. Any kind of investments go. What about withdrawals? There's none before age 17 with a Trump account. With an IRA, you can always make a withdrawal. You make a withdrawal, you pay tax on it, you pay a penalty if you're not 59 and a half, but the money is always available, but you pay a price. 72 penalties, yes, there's 72 penalties on both of them. Now let's talk a little bit about the 72 penalties, 72T penalties. Now, this is the penalty for taking money out before your age 59 and a half, but there are important exceptions. And ones that might apply a lot to the Trump account are for higher education. Amounts taken out for higher education are exempt from 10% penalty, although they are fully taxable. And that's the same thing with an IRA. If somebody takes out money for higher education from an IRA, no 10% penalty on that. Another one people talk about is first-time home buyer. So if somebody isn't waiting to take this money out when they retired, do they want to take money out to help them buy a first-time home? And there is an exception from the 10% penalty for the Trump account and from the IRA for a first-time home purchase. It's limited to $10,000, but that is an exception from the penalty. Now, the other account is, are there investment restrictions? And yes, we know that in the Trump account, you can only do index funds. With the IRA, there are no restrictions. And we hear about more and more exotic investments for IRAs, Bitcoins, real estate, all kinds of other things other than your standard run-of-the-mill things that you can get at your local bank or brokerage account. What about a rollover? You can only do a rollover when you're over 17. So if you're over 17, you can do a regular rollover. And with the Trump account, you can roll it to just a regular traditional IRA. You can roll it to a Roth IRA. That would be taxable, but that would be another possibility. So generally, a rollover is tax-free unless you do a rollover to a Roth account, and that's available with the Trump account, and both of those choices are also available with the IRA. And then Roth conversion, that's available. I guess I mentioned that is talking about the rollover, and with the IRA, it's always available. So there are lots of stories about these Trump accounts, talking about people putting in $5,000 per year and how much they're likely to have when the child reaches age 30 and so on, with a lot of limitations. And I know many of you do a lot with investments and probably are doing some of those kinds of calculations. But I wanted you to know the framework here, because not everything that you've heard about Trump accounts wound up in the legislation. So please stay tuned for more episodes in this series.